This is Joe Petrelli speaking, President and founder of Demotech, and we'll also have as panelists and attendees, principal attendees, Nancy Newmister, who's the President and CEO at Frederick Mutual Insurance Company. And Nancy's, I think, April is going to wind up being, 4 years at the helm at Frederick Mutual. Nancy has a background in commercial underwriting all the way through responsibility for functional underwriting, growth, profitability, agency relations over her career. And she's worked for some very substantial companies and now is at the helm at Frederick Mutual. And I'll let her share a little bit of that information later. We also have on the line Allison Sheedy, who is a partner at Constantine Cannon. And because there may be some competitors on the line and we want to have an open and a communicative webinar, Allison is joining us. She has a practice in both civil litigation and government antitrust. And one of her areas of specialty is competitor collaborations. So at this point, I would like to ask Allison to make an antitrust statement for the attendees, and then we'll go from there.
Thanks, Joe. Good afternoon, everyone. I'm Allison Sheedy. As Joe said, I'm an antitrust attorney at the law firm of Constantine Cannon in Washington. And I've known Joe and Demotech and many of the companies that Demotech rates for a number of years now, and appreciate that Joe is always very conscientious and tries to mitigate risk wherever possible. So whenever we do a call like this or a meeting that brings potential competitors together, even if you don't know one another, it's good practice to have a reminder at the beginning from someone like me that you should not discuss any competitively sensitive information, for example, about your rates or pricing or financials or your business decisions. It's absolutely fine for different companies to be in the same virtual room for a discussion, and it's obviously an efficient way to make a presentation, but any business decisions that you make or you're thinking about making need to be done independently and not discussed on this call. So if you have general questions, please submit them. We'll have time at the end, but if you have business-specific questions that are going to involve details about your operations, you will have Joe's contact information. I encourage you to reach out to him individually. So with that, thank you. I will turn it over to Nancy Newmister from Frederick Mutual.
Thank you, Allison, and thank you, Joe Petrelli. I'm very excited to be participating today as a panelist for Demotech. My background, very briefly, President CEO of Frederick Mutual Insurance Company, 4 years as of this coming May. Having been with the Berkeley organization as their CUO in the Mid-Atlantic, Liberty Mutual's CUO in the Southeast, where I learned a lot about the Demotech organization, and prior to that, multiple roles coming up through the Harleysville Insurance Company. So, it's kind of like this once mutual, then became very national companies that I've worked for, which was a perfect training ground for taking on this role here at Frederick Mutual. And I have to say that I have a deep affinity for competition. I believe that competition and the whole competitive landscape around our industry keeps us sharp, both financially as well as needing to be innovative as we move forward, because there really is no one size fits all when it comes to our customers as fellow insurers. And a quick example on what's going on right now with this coronavirus: you can't get toilet paper at Amazon. But guess what? You can get toilet paper every single day at the Common Market, this small local market that's owned by residents of Frederick County. So, I look at it as having an opportunity to talk about a company that I see as pretty amazing. I have a lot of respect for what Joe Petrelli, owner, co-founder with his wife Sharon, brought to the marketplace 35 years ago. Another rating company. Someone that can look at a fact-based approach and have a hands-on approach with any type of insurance company in our mutual space, smaller specialty space insurance companies. And I would like to share with you today just some of the approaches that have really helped Frederick Mutual, especially over the last year in that space. Joe's very quick to help out in need in terms of agents and policyholders as well as staff, and just understanding how to navigate different landscapes out there in the insurance world. So with that, I would love to hear Joe's conversation with everybody on the phone, and just be part of the Q&A as we go forward. Thank you. Thank you for having me.
Thank you, Nancy. And thank you, Allison, for your thoughts. Again, this will be, in terms of, as Nancy mentioned, this will be our 35th year. We were incorporated in September of '85. And in 1989, 1989, we became the first to review and rate independent, regional, and specialty insurers. And again, because we think a little differently than maybe the legacy rating agencies, at the bottom of this slide, you'll see our company classification system. We have 11 broad categories in that. And the purpose of our company classification system was to come up with business models, 11 basic business models. Types of companies would fall into those based on quantitative characteristics. And we think that a business model is a better way to look at a company than simply its financial size. I'm going to whip through the next little bit here. I'll put our first team up against anyone's. And here's part of the reason why. I have to say, as Nancy said, I founded the company with my spouse, Sharon Romano Petrelli, and you'll see her background information in here. And Sharon always says, when you tell people we have 200 years of experience with the main team, make sure you tell them that 100 years of it are yours. But anyway, that's me. I'm an actuary. I've been in the property and casualty insurance business for my entire working career. You can call it 1969 when I entered the College of Insurance, or you could call it 1974 when I got out. Sharon went a different route. She became a chartered property casualty underwriter. She's also a certified compliance professional, associate insurance accounting and finance. She kind of went the regulatory filings, rate filings and form filings route. Barry Kessler is our chief ratings officer. Barry's a chartered financial analyst, which is an international designation that's very well respected. And this year, talking about anniversaries, Barry will be with us 25 years. Bob Warren is a CPA, non-practicing because we don't do auditing, and he's also a CPCU. Bob's been with us 15 years now. He came to us with almost 25 years of experience. And for those of you that suffer through analyst turnover, Bob's been with us 15 years. We still call him the new guy. Doug Powell's been with us about 15 years as well. Doug has an MBA. He was a controller of several companies before he joined us. And again, his accomplishments and the things he does for us are listed here. Paul Osborne, who is not only helping us on the IT side to coordinate this, Paul's also the editor-in-chief of our Demotech Performance and Title Insurance companies, also gets involved in some of the financial analysis. And he often works with Insurance Journal on their salary surveys and their agency E&O studies. Rachel Wilkins has been with us now approximately 9 years. She started out as a part-time employee when she was working her way through Ohio State University, and we were delighted that she joined us full-time. I want to tell you a little bit about how we got involved in the insurance ratings sector. In 1988, Anita Champ at Fannie Mae was tasked with finding a way to review and rate independent companies because AM Best did not rate them. And so she was required to contact AM Best, and her counterpart at Freddie Mac also contacted them. But Anita wrote this recollection for our 30th anniversary of ratings, and in 1988, she was told by representatives of AM Best that it was impossible to rate independent, regional, and specialty companies. So we got drift to that. and we went out and we developed a process to look at independent, regional, and specialty insurers. And as you might suspect, it involved a heavy review of the reinsurance treaties and the type of reinsurance in place, as well as the financial integrity of the balance sheet and of the company. So May of '89, Fannie Mae announced that we were accepted as an insurer rating service. And how did AM Best respond to us doing the impossible? Well, the first thing they did was pick up the phone, call Fannie Mae and say, why don't you decertify Demotech and just use us? And Anita said in her own inimitable way, that was not in the best interest of the marketplace, competition, or Fannie Mae, and I did not honor the request. So that's how we got involved. Today, we are working very hard and to be visible at both the National Conference of Insurance Legislators level as well as the National Association of Insurance Commissioners level. We have a quarterly magazine, goes to about 24,000 decision makers. And I think those of you who've received the February issue, it had Commissioner Farmer, the president of the NAIC, and an interview with him featured in that magazine. Let's talk a little bit again about the composition of the industry. Again, here's our company classification system, 11 categories, all based on financial criteria, the idea being it's not about size. But here's the interesting thing about the insurance industry. This idea of diversification within the industry or size is fascinating to me because it is a myth, not a reality. There are about 229 risk retention groups, which by statute can only write a single coverage. There's about 363 companies that we have called coverage specialists, which means that 90% or more of their direct premiums written are in a single coverage. And then there are 704 state specialists, which is, again, a company classification system of ours. And the 704 state specialists write 90% or more of their dollar volume in a single state. So you have 1,300, 1,296 if you want to be exact, but 1,300 of the 2,300 companies reporting to NAIC were specialists. By contrast, there were only 61 that actually wrote business in every state in a meaningful amount. Warren Buffett, probably of our generation, the most well-known and respected investor, has stated that diversification is protection against ignorance. It makes little sense if you know what you're doing. And to a large extent, that's what the specialist category is about. It's people who know what they're doing. And we respect that category. We were the first to really review it and look at it heavily. This is an interesting chart. Again, the companies that report to NAIC, these are P&C companies. The largest companies, the top 5% by count, and that would be approximately 120 companies. They write nearly 60% of the business. The next 10% of the companies reporting to NAIC, approximately 225, 230 companies, they write well in excess of 60% of the business. And the top 25 companies by count, and these are companies, not groups, but the top 25 companies by count write approximately 80% of the dollar volume, which means that 20% of the companies by count are writing 20% of the premium. 80% of the companies by count are writing 20% of the premium. So it's very important to know that when you are after and looking at and underwriting and marketing, you are a niche specialist and you are immersed in the business that you're writing. one more quick thing to educate is if you look at companies and who rates who, and again, this was done in May, and we're going to be updating this periodically. The numbers don't change that much. AM Best reviewed and rated approximately 1,800 companies. We were at 406. Standard & Poor's at 537, and Moody's was at 302. Some of the other companies, such as Fitch and Kroll, they didn't make this slide because you have to have at least 300 companies to begin with for us to look at it. So the next slide is going to be the number of uniquely rated companies. So of the 1,833 that Best rates, it uniquely rates 1,099 of them. And if you look over to the right, those numbers are correct. Of the 500 plus that Standard & Poor's reviewed and rated, only 9 were uniquely rated by Standard & Poor's. Similarly, only 5 of the companies that Moody rated were uniquely rated by Moody's. We're actually the number 2 in terms of unique count of rated companies. And I think that's an interesting statistic. The other thing that's happened, and the other thing that people should be aware of, is there was an independent study in 2011 by Florida State University. Dr. Cassandra Cole, who's a PhD and is a well-known insurance author and analyst, Dr. Kathleen McCullough, who is now the Dean of the College of Insurance and Risk Management at Florida State University, and at the time was also Dr. Enya Hay, who was with the University of Northern Texas, and she's now with, I believe, had a position with Lloyd's. But they published an analysis of 9 years of ratings looking at Demotech, Standard & Poor's, Moody's, Fitch, and their conclusions were published in a report called The Comprehensive Examination of Insurer Financial Strength Ratings. And what they concluded, and we got, I'll tell you a quick story. We got this study after everybody else had looked at it. So basically, Standard & Poor's, Moody's, Fitch, and AM Best had edited the report, and it came to us. They basically said, this is as good as it gets, Joe. You know, if you find a typo, let us know. But other than that, you can't really make that many changes. The entire study basically said, number one, we serve the needs of a unique group of insurers. Comparisons of our ratings to the other guys show relative consistency in which factors and criteria are utilized. Also, general consistency in the firms that each of us would categorize as secure. And this one, I did add the bold and the italics. Of particular importance is the comparability of our ratings to others. And it goes on to say that the results suggest that we serve an important service within the ratings community. The reason I mentioned this study, there's a full study and there's also an executive summary, is everyone who has seen it and read it, we were the very last to have a chance to review it, but everyone who's read it has said, did you pay for that study? And the answer is no. It was an independent analysis. We were the last to see it, and the legacy rating agencies don't appreciate it because we rose and we shined. This is our rating categories. We have but 6, okay? And everybody else has a few more, but our business model is to work with companies that we feel are underrated or unrated. And so we don't need a wide variety of ratings because we don't work with companies that we don't think are financially strong. Here's a second study, and before I talk about the study, let me tell you a little bit about Dr. Michael Barth, PhD in CPCU, and Dr. Robert Klein. Dr. Barth worked at the NAIC for 10 years. He was with them when they developed their risk-based capital formula. And he is a marvelous academician, but he's also a practical guy, and I've met him a couple times. I like him. He tells the story that when they were developing the risk-based capital formula at NAIC, he at first recommended that there needed to be 3 or 4 risk-based capital formulas. One for larger companies, one for medium-sized companies, one for smaller companies, and if at all possible, there should be a 4th one for companies that were, considered maybe even smaller than small. And the response that he received was, that makes sense. However, we don't want to be in a position to decide who's small, who's medium, who's large. Let's just go with one formula. Let's pretend one size fits all. And so he did that, and he left, and he is now the associate dean at the Citadel. Dr. Robert Klein had 5 years at the Michigan Insurance Bureau, the Michigan Department of Insurance, and he recently retired after 20 to 25 years with the National Association of Insurance Commissioners. Dr. Klein was also the director of the Center for Risk Management and Insurance at Georgia State University, where he spent several years post-retirement. So these are 2 serious men, both PhDs, both steeped in insurance their entire careers, and with more than 30 years collectively with the NAIC. And we provided them with every insurance rating we had ever published. And then they went on to verify the survival rates of every insurer that we ever published. So if we published a rating back in 1989, our first year, they traced those companies down, and they figured out where those companies were at the end of 90, 91, 92, all the way forward. When they got done, they compared those survival rates to the survival rates of the AM Best company. When they had published their study, they believed that this was the first time in the history of insurance ratings that any company that does ratings had ever opened up and said, here's every rating we ever issued, here's what we think happened to those companies, verify their survival. It was the first time. They thought that was unique and unprecedented. Those are their words. And when they got done, they forwarded a copy of that study to every department of insurance, to the commissioner and to the chief financial examiner. They were convinced it was the only time that that had ever happened, that someone had done that. And I do want to spend a little bit of time talking about, and these thoughts here, I'm going to talk a little bit about what AM Best says about their ratings. And this is what they say. This is not us, this is them. And I bring this up because we compete. I don't mind competing against the structural monopoly, but it's tough to compete against a myth. And so here's some facts. They've said in court on multiple occasions their ratings are opinions, not statements of fact, and they're not capable of being proven true or false. These are their opinions, not a statement of fact, and they, again, hammer it home, this is our opinion. And then they also take the position, it's well established that credit ratings are opinions, and they're inherently incapable of being proven true or false. They once said that when they were accused of having an unfair, arbitrary, unfounded, and inappropriate opinion, they replied, there's no such thing. And they cited a case, and they went on to say that if you want to correct an opinion, you must correct it not with judges or juries, but the competition of other ideas, which is a little different than what happened to us back in 1989 when we were approved by Fannie and Freddie. But the competition of other ideas. I think the other thing that's fascinating is that they indicate that their ratings are not facts, but are original, creative, expressive works. And in the volatile economy that the COVID virus has given us the last several weeks, they go on to say that their ratings are not facts like stock prices, bond yields, mortgage interest rates. Rather, these are original, creative authorship. They don't exist as facts in the world. And then there was a long-standing, this is a quote from a publication in 1989. The main purpose, and this is from an officer of AM Best, the main purpose of Best is not to predict insolvencies. We don't have a rating that says this company or that company will go broke in 2 years. And I bring this up because it's apparent that people misuse the rating. They're uninformed about the rating. And AM Best has often said that it's the competition of other ideas that's critical, because their ratings are not facts. And so I think it's important for us to all look at this as factual information, because it's AM Best saying it about AM Best. And if they don't think their ratings are facts, and if they think that their ratings need the competition of other ideas, I would respectfully submit that that's where the rest of us should be as well. Okay, so let's talk about some of the things that we've pushed through, we being, Demotech over the years. This is a partial list of some of the E&O carriers that recognize our ratings. Most of them recognize our ratings of A or better, but there's a couple on there that were really, that actually will accept a rating of S or better, with an S being slightly different than an A, slightly lower. But the two that I think are most interesting, Namico Insurance Company will accept S or better. It's owned by NAMIC. NAMIC represents approximately 40% of the industry's premium volume. And they have done their due diligence, and they're willing to accept an S rating as within the insolvency provision of their agency E&O. The other one that's interesting, about halfway down, Munich America Re family of companies. There are 4 companies in the Munich family that write insurance agency E&O. They will also accept a financial stability rating of S, one notch below A, within their insolvency provision. And the reason we're extremely proud of that one is Munich worldwide has over 40,000 employees. And I think every one of them had a question for me when they were going through their due diligence. But the point is, depending on the time of day, they're either the largest reinsurer in the world or the second largest reinsurer in the world. And they did that due diligence on us, and it was very successful. Okay, regional and specialty insurers. We love them. We understand them. We like them because they know what they're doing, and that's what they do. I think it's really kind of interesting. If you're a sports fan, Michael Jordan is often considered the best basketball player who ever lived. But those of you who followed his career, there was a time when he tried to become a baseball player, and I think he was a AA, maybe a AAA baseball player. So diversification didn't work for Michael Jordan, but he was extremely good at his niche of basketball. We also understand that if you're a niche player and you're a specialty writer, you may not be widely licensed either by state or for other coverages. You're going to concentrate on what you know. The other thing that we believe is, if you as a specialty carrier want to write and have a conservative reinsurance treaty where your retentions are relatively low, You might be able to take a bigger net line if you wanted to, but you prefer not to. That's your money and that's your choice. We're not going to tell you what kind of reinsurance participation you should have as long as it's reasonable. It doesn't have to be the highest participation you can afford. That's not what we're interested in. We understand that some companies, some rating agencies will say that you have to have faith in your program, and the more of your business you keep yourself, the better it speaks of your business. We don't look at it that way. You are entitled to buy and cede as much reinsurance as you want. We also like consistency of underwriting discipline. I'm relatively certain that no one on the phone wakes up in the morning and says, I'm going to go find an international publicly traded company and I'm going to cut my rates in half and go after their volume. Everybody's got discipline and everybody understands their own walkaway price. Transparency of financial statements. It was the American International Group whose holding companies were selling derivatives 12 years ago. It was not anybody on the phone. You also understand that part of the professionalism and the exceptional underwriting and marketing that you bring to the table in your niche is due to the agents that you work with. So you're going to have a core of agents whose specialties tend to follow the type of specialty that you write. From my perspective, financial stability ratings can be assigned to new companies, which we've done, as well as to established companies. And when we look at what we call the relevance of historical operating experience, sometimes it means that companies have made a mistake and have had bad results, and the way they correct it is to say, we aren't going to do that again. So we will always, while we certainly look at financial stability as a process over time, we also understand that sometimes things don't go the way you thought, and so sometimes that historical experience is not necessarily indicative of where you're going to be tomorrow. As a matter of fact, we chose the term financial stability rating because it's the stability that's important. It's the consistency over time. It's sticking to what you know, and that's the reason we say stability. So to the extent that that remains an integral part of what you do, it's an important part of what we do as well. Let me talk about capital adequacy for a minute. I think that there's a fascination with projections and black boxes and models. However, at the end of the day, what capital adequacy is about it's about the ability to execute your business model. And that is what we look at. You can have a very bad quarter, but with the right reinsurance program, it could be hail, it could be tornadoes, it could, whatever it might be that causes a bad quarter. We're not going to sit there and look at one quarter. We're going to look at, can this company proceed from this point and continue being who it is? We had a situation many years ago where some publicly traded companies were sending out press releases talking about to their investors about the fact that because of this storm or that storm, they weren't going to hit their marks on a quarterly earnings. We encouraged many of our clients who were in the same geographic areas that had the storms that you should be sending out press releases saying, we're rebuilding your homes, we're repairing your roofs, we're taking care of your cars. That's our job. And it's fascinating to me that the publicly traded companies, when you look at a storm, They talk about what it's going to do to their earnings and to their investors. And yet, on the other side of it, the specialty companies, including some of the mutuals, should be tooting your own horn and saying, you know what, we're going to rebuild some houses. We're going to rebuild some buildings. Virtual companies, sometimes we see those. We'll see companies that have the employees through a managing general agency. We'll see companies that have a full staff of employees. It goes all ways. But we do reserve the right when we're doing a rating to look at, who's providing your actuarial services, who's providing your auditing. We'll have some questions. We'll want to see those reports. But everything we ask for is going to be something you already have on a shelf or you're giving to a regulator. We don't need supplemental information. And a big part of the reason we don't is because we are all insurance people here. You saw that with the breadth and depth of our first team. Reinsurance, very important. It's critically important. You know how important that is. We do have some standards. We do have some reviews that we do, whether it's in a cat-prone area or whether it's casualty. But we need to understand the reinsurance decision process at your company. We need to make sure in a cat-prone area that the company is also meeting our criteria. And we have some ways to do that. Now, one of the things we do, we're not cat modelers, but we do have meetings on a regular basis with each of the major catastrophe modeling companies. They either come visit us once a year or we go visit them once a year. So we try to stay current in that way, and we have very open dialogues with them. We review and rate and affirm every quarter at a minimum 4 times a year plus a reinsurance review. There's a minimum of 5 touches. And there's a wide variety of information that you already present and prepare that we can access. We don't need to have any supplemental requests. Okay, so we got all these insurance people. We have these established procedures and practices. We've had these studies done by Florida State University and 2 very distinguished professors, as well as other studies. Where do we wind up after all this? These are Demotech's 4 ratings that we consider to be above average or credit quality and above. And those would be our A double prime, A prime, A, and our S. And we compared those to a very popular benchmark, which is A- by AM Best, which is the red bar. And all the variations of gray are Demotech ratings. 2 things, if I may, about this graph. Number 1 is the survival rates that are presented for the Demotech ratings, which is the gray bars. Those were independently calculated and verified by Drs. Barth and Klein. The second thing about the study that Drs. Barth and Klein did, these survival rates are based upon what's called the static pool methodology, and there's variations of it. When we gave Drs. Barth and Klein a copy of AM Best survival rates, which is where this red bar came from, that study published by AM Best included the static pool methodology that AM Best used. Drs. Barth and Klein refused to use that methodology when they calculated ours because they said it was too lenient. So they used a more rigorous static pool methodology on us than in the published AM Best report. And so despite that, you can see that ratings of S or better more than held their own against A-, even though Drs. Barth and Klein used a more rigorous methodology. Let's talk about where regulators are headed. The National Council of Insurance Legislators has passed a model act, and it's really got two parts to it. Part one says the states are in charge of the insurance industry, not the rating agencies. And the second part of the model act says here's a list of some competent rating agencies. In their list, in their model act of competent rating agencies, Demotech is specifically listed. And we're very proud of that because we're listed there with the legacy rating agencies. I'm going to give a quote from one of the, if I may, I'll give a quote from one of the testimonies. There was, at the hearing, if you will, when they had the discussion of the Model Act, there were over 300 submissions from insurance companies indicating that this was a good model act that needed to be put in place. Insurance companies were tired of one size fits all, and there were over 300 unique submissions from insurance companies. I'm going to read from public testimony. At the time, it was given by Britt Newhouse, who was the chairman. He's now retired, but he was the chairman of Guy Carpenter. And one of the excerpts from his testimony to the committee, he said, and this is a quote, "The rating opinion published by a single privately held rating service carries significant disproportionate weight. This effort by legislators to identify and embrace all credible rating alternatives will expand competition in the insurance marketplace to the benefit of consumers, secure and expand the employment base of insurers and independent agencies, and confirm the authority of state regulation." So there's one of Nancy's favorite words, competition. And that came from Guy Carpenter, Britt Newhouse. Another snippet here, and then I'll ask you, Paul, for some of the questions that have come in. But another snippet here. The Bermuda Monetary Authority, the Bermuda market, is well respected for its regulation of insurance companies and reinsurers. And last year, they specifically approved Demotech companies. We can now assign, if a company earns an A rating or better from us, to a special purpose insurer in Bermuda, they would be designated as an unrestricted special purpose insurer. And that is what it means, that they would be unrestricted, that if you had that A rating from Demotech, as well as other rating agencies that were approved down there, the legacy rating agencies, that your captive would not have to submit additional information. Here's an award we're very proud to earn, Niche Financial Analysis Provider of the Year. We've won this award, I think, 6 years running. Best Property and Casualty Insurance Rating Firm. Niche Financial Analysis Provider, again, an example of what we've been doing. This is my favorite, Game Changer. We've won this one 6 years in a row. If any of you actually want to have, if you got 7 minutes and 10 seconds that you, and you have your iPad in front of you, you might go out to YouTube and search for Kathy Ireland Demotech. It's a fascinating 7-minute interview, and the thing that's fascinating about it is that it was about us being the first to review and rate independent regional companies and worldwide, it was broadcast on the Fox Business Network and on Bloomberg channel. And what's interesting to me is they called us a few weeks after it aired, and they said to us, would you mind if we played this again? People have been calling in or emailing that they only got to see part of it, and they love the idea that there's specialty companies out there. A lot of our viewers did not know that. And so it wasn't just about Demotech being the first to review and rate independent, regional, and specialty companies. It was about regional and specialty companies being a viable alternative in the marketplace. So those are my prepared comments. Paul, if there's a question or two that's come in, I'd be delighted to respond to it.
Sure. For those of you that joined late, on your webinar side panel, there is a questions section. Feel free to type in anything you want more information about, or if you have a question about a specific topic. We do have some. The first, actually, there's a couple. I'm just going to try to blend them here. As far as the NCOIL Model Act, what are your general impressions of that act? I'm not sure who we want that to address. So what's the effect of that on state regulation?
I think I could take that one, and Nancy or Allison, if you want to jump in. I think the thing that was fascinating to me, because I was there for both for the testimony as well as the deliberation of the committee, is the state legislators. I'm talking about the House Insurance Committee members and the House Insurance Committee in every state and those in the Senate. Some were surprised they needed to reassert their primacy. Others were sort of aware of the fact that their power had been eroded basically by one legacy rating agency. And they are intent on pushing back. And I will say this Model Act has become law in Ohio, and it's been introduced in other states. I don't know if Nancy or Allison, if you had a response to that question.
Yeah, this is Allison. I think it's a wonderful model act. I'm happy that it's been enacted in Ohio, and it's really trying to combat a situation, a historical situation where a requirement of an AM Best rating has gotten baked into either state or local or municipal laws. And there's no particularly good reason that happens. And so this is a nice recognition that that's not the way it should be.
I'd like to comment a little more broadly, and this is Nancy. There's been an education that's been ongoing, particularly over the last 6 to 9 months, with regard to different departments of insurance, agents, and policyholders within this regard. So I'm really happy to see this Model Act approved in certain states, and would like to see it approved in all the states we do business in. It's important that there's a basic understanding of the situation.
Thank you. Paul, maybe one or two more questions, depending on the
Okay. There's a question regarding reinsurance brokers, reinsurers, and how they can support their clients, and what our position on that would be.
Well, I'll give you Demotech's position. I mean, we welcome support from wherever it comes. I think from the reinsurance brokers, I think we have good relationships with most of them. I know, we have last year we had JLT acquired by Marsh/Guy Carpenter, and then this year it looks like it's going to be Aon Willis. But we have several people at each of the brokers that we know well. We don't know every individual who's a broker, but we have good relationships. But we would welcome that support And I think certainly that support would be consistent with the NCOIL Model Act.
Okay. Let's see if we got another one coming in here. Can we discuss the difference between qualitative versus just hard quantitative when it comes to ratings and what people view as being more of a quantitative analysis? What role does subjective information have in that?
I'll take first swipe at that, and then Nancy, if you wanted to share some insights, you're welcome.
Sure.
I think if my belief and Demotech's belief at this point is, I think third-party users of ratings assume that the rating is about a company's ability to pay, which is a quantitative idea. And so the idea that somehow qualitative things factor heavily into a rating, I personally believe is inconsistent with the concept of a rating. I think it should be predominantly numbers and financially based. And the subjective things, I think you're getting kind of off the reservation, I think, on things like that. Nancy?
Yeah, and I'll speak for Frederick Mutual in terms of, this company is 176 years old and has weathered, oh gosh, multiple wars and storms and all kinds of things that we can't even imagine 176 years ago. So, I believe on that financial stability rating is very important to look at your financials, and that's an indicator. Obviously there's a lot that goes into that in the underpinnings of the organization that you're talking with and the fundamentals that they put forth. And that's part of the rating process here. So all of that's important. And then when you start to stray too far from that, I think then it's what are we really looking at here? And how does that apply differently to different companies? Because then it becomes, well, this one is rated this way and this one's this way for very same reasons. And personally, I don't like to see that. It's an important for a company to stand on its own.
And I think, if I may, just as a sort of a closing comment, because I want to be cognizant of your time. To your point about a 177-year-old company, one of the things that I think people at other rating agencies like to talk about is enterprise risk management. And I think a company does not get to be 177 years old unless it has enterprise risk management baked into its DNA, and it was doing enterprise risk management before that became a buzzword. And so when we're looking at companies, and many of the companies in our portfolio of companies we review, they're well over 50, 75, 100 years old. Yeah, if we have a specific question about a practice, we'll ask you a question. But if you're 177 years old, you've been doing enterprise risk management for 177 years. You just don't get to do that. If there's a closing comment that, Nancy, that you'd like to make, or Allison?
I would like to say that just from my experience in working with you, Joe, the hands-on approach I think is extremely important to talk about briefly. When there are questions, whether it's from the Department of Insurance or an agent, a key agent, or a new agent that wants to join your company, or even a policyholder, what I have found is the access to Joe is fantastic. And the detail in which he will put forth information is also fantastic in terms of being able to educate even a small policyholder. Has been instrumental and a very, very good opportunity for Frederick Mutual. So thank you.
It's our pleasure.